Hey everybody, hope your day is going extremely swell and your weekend is getting kicked off right. Today I'm going to talk about something a little bit different, which is credit card scores. It's something I've never really touched on the channel, but just give you guys a little rundown of how they're calculated, my personal experience with them, and how I found out how to make mine the best that it could be. So kicking right into it here, you can see here on the screen Wells Fargo provides a free FICO credit score every single month, and mine has been hovering around the 800 points range, and you can see that the score range anywhere from 300 to about 850 points, with the 350 being the lowest or 300 being the lowest in the red, and going all the way up to about 850 in this green area here. And you can see I'm almost all the way up there, but I have a little bit of room to go. And I also have a little story because my credit score recently just went down by about 50 points, and I can explain why. Now, actually going into how this can actually be calculated and how it's calculated, and we'll kind of go into Credit Karma here in a second, and this relates very heavily to what you'll see when we go to Credit Karma. But there's basically 5 key things that you need to take into account. And that's payment history. Payment history, obviously, if you pay your credit card bills on time, it's favorable to when credit card companies evaluate whether or not you deserve either low or higher interest rate payments. Obviously, if you do not have a good credit score, you're going to be a riskier lender, and so therefore they're going to give you a higher interest rate in order to offset some of that risk. There's obviously current loan and credit card balance. So obviously, if you have $100,000 worth of revolving credit, whether through credit cards or anything along those lines, and you use all $100,000 of it, you have no more ability to pay anything off. So therefore, that being said, the only other option you have if you need to go into more debt in order to pay off anything is to file for bankruptcy or file for another credit card, and then you'll probably end up utilizing that one as well. So the hope is they give you a revolving credit line, and yes, you might be able to use it during times of need, but hopefully you're at the point where you can kind of utilize a lower amount of it. And we'll get into this part of it, of the credit score, in a little bit, because this is something that I'm facing at the moment and why my credit score dropped by about 50 points in the last month. Then you obviously have things like the length of your credit card history. Obviously, folks that are just starting out, they're 18, 19 years old, don't have a long credit history, and so therefore it's going to be more risky for folks to hand you over money, especially at a younger age. And so what they take into account is they correlate that with the fact that you've only been in the market for 1 or 2 years, and so you might be less responsible with your funds and your financial education than someone who maybe has had a credit card for 20, 30 years. That might correspond to someone in their 40s and 50s and has more stable job, more income, and has had about 20, 30 years worth of history that people can then look back on in case of any sort of need for additional loans or credit cards or installation loans or anything like that. Then the different types of credit is something that I believe hits my credit score a good bit. If you guys remember, I have 800 points versus 850 of the maximum points. And I think that's just because of the fact that I only have credit cards. I have nothing like student loan debt, car payments, housing payments, or any other type of personal loans that I'm then paying for. So I think I don't get this 10% because I'm only utilizing one amount of credit. Then there's new credit. I'm not exactly too sure what this new credit is, whether it's you trying to apply for further credit or anything like that. Obviously, if you continue to apply for more and more credit cards, it's not going to look very good because that just means that you're trying to expand your revolving credit, and that can or cannot be bad, and I'll talk about that in one quick second. So if you remember on my on my Wells Fargo, I had this credit score of around 797, and here you're seeing 759, and it's not inaccurate, and it's not wrong. I went from 797 to 759, and here's why. You can see here on my Equifax that I went down by about 48 points, and something very similar in my TransUnion account. And reason being is because last month I went on a vacation, put all that on a credit card, and basically increased the normal amount of spending by about 5%. Now, if you remember, the amount of how much you're utilizing of your credit card loans is a very important part of it. And what ended up happening is I generally utilize less than 10% of my total credit limit. And this past month rather, I immediately went above that when I increased by about 5% to go on a pretty nice vacation. And so if you actually look at the details of this, it kind of explains that. And you can also see in the Equifax here that I used to have an 807 credit score earlier this month and it dropped. TransUnion is a little bit more ahead and more recent, and it went to 759 and it stayed at 759 almost month over month at this point. But you can see back here, the last time I actually updated my Credit Karma score, it was probably in the 800s or so, but it's been a couple months, maybe even a couple years since I opened it. And so you can see this long line at when the last time I updated it was, and it was probably high 700s, and now it's getting towards the mid 700s based off of this factor. Now, if you remember what we looked at in Wells Fargo, here's a different way to look at it. It's basically payment history, credit card use, derogatory marks, which is like collections and stuff like that. Hard inquiries, which is you trying to apply for more credit. How many total credit card accounts you have. And then once again, length of account history. Now, if you remember, payment history and the usage of the credit cards is most likely 60% or so of your total credit score. So if you remember, in looking into this specific part where you have, say, credit card limits, you have anywhere between 0 to 9%, 10 to 30%, and then it gets into the worst section. Generally speaking, I get to the 0 to 9%, and you can see here what it's saying is, since I spent a crap ton last month on vacations, this would move up to the next level. Generally speaking, my $8,000 is about half that, maybe $3,500. And so what ends up being is I spend around $2,000 or so a month in credit card bills, and that's really my only thing that I have. It's anywhere between $1,500 to $2,500 a month in terms of how much I utilize the credit card for. But that being said, those are my own expenses. I mean, I don't really have anything else other than that. So when you factor that in, it's less than $6,000 because if it has 2 months worth at any time and I pay off in full, it'll build up by the time I pay it off to $4,400 or $4,500. I pay it off, it's down to $2,000. And basically it just keeps around that $3,000 to $4,000 range. I never pay any interest though. Every time a credit card statement comes in, I pay whatever the full statement was, and it's generally around the $2,000 mark. But you can see if I were to have that $4,500 or so, it's way below the 10% range, because 10% would be about $6,200 or so. This month I went above, obviously, 13%, and so that knocked me down one little tier. That also being said, I have 100% payment history. Obviously, if you get down to 99%, you'll take a decent hit there. That'll probably be about 50 points just by missing a payment history. Then you also have derogatory marks, whether you have public records, collections, or anything like that. This one's pretty interesting, and this one I'll get into and have a decent story about at the moment. But this is based off of your average age of accounts. So obviously, being more than 10 years of your average age of accounts is optimal, and that just means that credit card history is very lengthy. So if anyone ever wants to get deep dive into it and see how worthy you are of a loan or a new credit card, they have a long history to kind of go back and look at. So what I basically did is I saw credit age history being a big thing and total accounts also being a big thing, and we can get into this in a second. And also hard inquiries being a negative thing, meaning the more inquiries you have, I currently have 0 because I don't really need any more credit, but you can have all the way up to, infinite amount, whether it's 9, that hits you very negatively. But what I saw immediately looking at Credit Karma a couple years ago was the more credit card average history you have and the more accounts you have, the better it is. So if you think about it, if every single year for 10 years you apply for a new credit card and you get it, this isn't forever. So this would only have 2 inquiries on it, so that's not a big deal if you were to take this route. But what ends up happening is then your total account age history over that 10 years is 5 years or so, and the total accounts is 10. So you'd probably be around where I'm at. Hard inquiries are at about 2, so that'll negatively offset some things. But you're not going to have a yellow or you're not going to have a green sort of credit card age history. You'll have the 10 to 11 accounts. So at that respect, you'll have like a red potentially into the green for the amount of card histories that you have. But what ends up happening there is you're still not perfect on, just like I'm not, on the total amount of accounts. You'll have 2 inquiries against you, so it won't be necessarily perfect. It won't be 0. And then your credit card age history would be 5 to 6 years. So what I ended up doing when I first started getting credit was I recognized that I wasn't really going to be buying a house or anything like that for quite a bit of time. And so what I ended up doing was applying for 4 or 5 cards that I really, really wanted within about a 6-month to a year period, knowing that I would take a huge hit on my hard inquiries, but I also knew that I would get my total accounts up. The total amount of closed accounts, that includes something like auto loans that I used to have in the past, student loans that some people might have, all the different types of credit cards that some people might have. And so you're able to kind of keep these in the back to let people know sort of how worthy you are. So even though I have closed accounts, it'll say, was this account closed, in good faith, just for lack of use, or was it closed because they didn't pay the debt and had to go to collections? So it gives people an idea, even though it's in a closed account and people might think, well, that's not necessarily a good thing. They still provide history, so that way you can still kind of go back and get an idea as to how credit worthy that person might be. So what ended up happening was I had about 3 to 5 inquiries going on very early on in my credit history career. And so this wasn't looking good. I was still in like the low 700s, high 600s. And for someone being like 22, 23 years old, it wasn't a big deal. But what it also had was something with less than 2 years of credit age history. I really only got my first credit card when I was like 21. And so basically it was like was it a Discover card or was it a Capital One? But it basically was useless. I basically had 0 credit limit. I had like $500 on it. So it basically just got me into this cycle where if I have credit card use and I have $500 and I use, $150 on it just to try to establish some sort of history, I'm red here or yellow here because I'm using 30 to 50% of the credit limit. My age history is off. My total amount of accounts are 1, so I'm in the red there. And even if I had 0 inquiries, it's not looking good. So what I decided was to go on a couple year or 2 sort of growth period where I'd try to get a decent amount of credit cards. And if it was like Macy's is having a credit card, so I'd be like, okay, well, I'm never going to use the Macy's card. And it requires a lot of discipline if you're going to do this. But what I saw was, okay, Macy's will have a card there. When I bought my Rolex, they offered 0% that way. And so all I did was put down 40% for the Rolex, and then I paid off the rest. As soon as I had cash, it was like a couple $100 a month, and I think I paid it off over 3 or 4 months because I had the cash. And so what ended up happening was I had a very low credit card history, and they all kind of were in like the 1 year to 1.5 year range. But as it grew, now I have several accounts and several credit cards that have grown with me. I haven't had any hard inquiries. I have a decent amount of total accounts now with some of the car loans that I've had and now have closed in the past. And now I have 5 or 6 years, which is basically how long I've needed the credit cards since I've been out on my own. And they're all relatively the same age. One of them is like 6 or 7 years old, and then the others, are somewhat, 3, 4 years down the road. But you can see, they're all relatively similar in age, and some of them I might actually cancel. I generally utilize this Elon Financial Services, which is actually the Fidelity card, the most, but this Capital One card is something I've had with me for a long time. But, that's how I kind of got myself to the point where, I have a high 700s credit card score, is I kind of went into a bad credit card score, or it actually like negatively impacted with the foresight that these are the things that matter for a credit card history. And so therefore, even if it's negatively impacting me in the short term, in the long term it'll look better because I'll have more credit card age at the same time. And the total amount of accounts will grow, and eventually I'll get 0 hard inquiries. And I'll also be able to lower the amount of total usage I'm using. So you can see now that I'm up to $62,000 worth of limit, whereas before when I first started I have $500 from my Capital One card, which was useless. And so over time I grew the amount of total accounts. One of them is 25,000. Some of them were up to 13,000 because I didn't use it. They lowered it to 7,000. So you kind of have to play that game as to how to game the system and know what the system is for you to best utilize it. Now this could go down to 40,000 and it wouldn't be that big of a deal because I'm only really using $4,000 to $5,000 of it a month. It's just this last month I had a little bit of an increase, and so that's why I lost 40, 50, almost 60 points in some instances. But the biggest thing obviously for you guys is the high impact ones, which is the payment history and the credit card usage. That, looking at what Wells Fargo said, is about 50-60% of the total value and the total underlying foundation of your credit card score. And then these other things are 5-10% each or so. So a little bit less impactful, but they all kind of play together, if that kind of made sense. That long story I told you guys about doing the short-term negative impact to my credit card score for a long-term overall better credit card score is something that I would advise and look for some of you guys to potentially do, especially for the fact that some of you guys might be watching this video and are new to getting credit cards, and that's why you're watching this video in the first place. But yeah, I think what you just need to do is come up with your own plan and think about whether or not that works for you. And you'll see here within a year and a half or two, I'll be hitting the green and hopefully on my way towards an 850 credit score, which is hopefully the max. But yeah, hopefully, I've already paid this past credit card bill that was from October, and man, that thing was scary. I think it was like $4,000 or something like that. So actually it might have been more. I think it was closer to 4,000 or 5,000, but I had a bunch of plane tickets. Obviously I was flying home for weddings and stuff like that. So not all of it was me balling out on a vacation, although it was a pretty sweet vacation. I'm not going to lie to you guys, but just understand where you guys are within your limits. Credit Karma is free. You can use that to your advantage. And as long as you know your limits and where the best things that you can do to maximize your credit card score, you'll be best off in the long run. So thanks guys. I really appreciate you guys coming to stop by the channel. If you have any questions or comments, leave them down in the comments section down below. And if you haven't already, please like and subscribe. I'll talk to you on another video. Cheers.